Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Tuesday, November 14th, 2023. Let's take a look at the charts. Start with the big picture, work our way into the day itself. Just a reminder that this descending channel top on the weekly chart, this is the weekly chart, this week for the entire week, 165.23 to 166.65 is a formation, a band of channel resistance, I would call it, now channel support, that we settled above in May, setting off a long-term buy signal that is still ultimately anticipated to yield this 231.11 long-term rising channel top. On the way up, we fell back, obviously, retested this channel support several times over the last couple of months, and each time we've tested it, I mentioned how the 185.93 descending channel top should be considered a 1 to 2 month target. We tested it within about 3 weeks of testing. We tested, how should I put this? Within 3 weeks of testing the mid 160s, we rallied up into the mid 180s. That was last week, and it is held on the weekly chart. Now, on the daily chart, as you can see here, we actually closed just above it last Friday. But as you recall, I was of the opinion, not so fast. Weekly charts tend to reign supreme in terms of longer-term trend moves, longer-term trend identification, and we would need to close above 185.93 at the end of this week, and that should be by a 1% margin. I'll provide you that number on Friday. If we were to close above 185.93 this week by a 1% margin, then we enter another phase that I think could look very similar to the January low to the July high. That rally could be reduplicated to the upside, 231.11, then in reach potentially within 3 to 5 months of closing above 185.93. But until then, we have merely tested midterm resistance and are now susceptible to falling back to long-term support in the mid 160s. This could take only 2 to 3 weeks, but I think it's more in the neighborhood of by the end of December. Over the next 3 to 5 weeks, we could unravel all the way back into the mid 160s. Now, I see no clear indication of that. I would see a clear indication of that, as I've been saying, if we were to close in the coming days back below this blue line, this simple channel top that we did settle above about a week ago, and if tested over the coming days, offers a solid entry zone for a long position that should then, within a matter of possibly 3 to 5 days, result in a retest of this 185 handle resistance. So this is actually a pretty good setup for the day on the way down. I don't show 184.43 here, but I do think we have it. Here it is, 183.43. Sorry, not 184.43. 183.43 is a short-term, well, it's more of a near-term rising channel bottom. It incorporates trade over the last 3 weeks, but it's very steep, as it would be given this rally. It is able to contain session weakness. I do like 183.43 because it is just below Friday's low, the low of the move high. So this is a head fake. I think the low from Friday, I don't have it in front of me, is 183.53. So we could break 183.53, test 183.43, and then proceed to rally for the rest of the day off of 183.43. I have that as a session containment. Off of 183.43, we can rally back into this zone of resistance to 185.93 within just a few days. But if we do close today below 183.43, I do see possibly tomorrow, I'd say Thursday at the latest, 180.10, which is still a 3-star weekly support level, able to contain weekly selling pressures, possibly through next week. And once tested, we can rally back within 3 to 5 days to the 185 handle resistance. 185.37 once again was violated on the daily chart, but the weekly chart numbers are always a little different, and it's at 185.93 this week. It's held beautifully last week and this week so far. And as I say, holding below 185.93 will keep the mid 160s in reach again by the end of December. So as we're testing this area, this was a zone to take profits if you went long over the last few weeks, and there was a couple of opportunities for that. The first and foremost was just merely testing mid 160s. I'd mentioned how this 185.93 channel top should be considered a 1 to 2 month objective. And then on the way up from there, we closed a couple of weeks ago above this 172.48 speed line. So holding below the 185 resistance, as I say again, will keep the mid 160s in reach. And I will say that if we close today, and I don't see this happening, but by the end of the week, if we close below 180.10, I see that as a good November high. You should play the short side if you're not short already. In fact, it is being short right now. That is the position to be if you are anywhere from 3 to 5 days out to 3 to 5 weeks. 3 to 5 day swing traders can expect 180.10, and 3 to 5 week swing traders can anticipate the mid 160s. Now, of course, there are no guarantees that we will fall to those levels, but I will once again take you back to this chart that if we close today below 183.43, 3 to 5 day swing traders should at least see 180.10. The big question will be, of course, can we unravel? Will we unravel all the way back to this longer term support in the mid 160s? And the answer for me is yes, if we close below 180.10 in the coming days. If we close below 180.10 and your time horizon is 2 to 3, 3 to 5 weeks out, no good reason to be long Apple. You should be playing the short side within a week or two down to 172.48, and within 2 to 3 weeks back into the mid 160s. Until then, you can bottom pick 180.10 as a 3 to 5 day swing trader back up into the mid 180s, the 185.93 channel top. I think I've covered the downside pretty well. Let me finish with the upside, and that is to say that if we close today above 185.93, that's an intra-week buy signal. We've yet to close above this formation on a daily basis, obviously not even on a weekly basis, but if we close Tuesday above 185.93, there is a decent chance that within the week we'll reach this 189.98 September high. And then, of course, if we close the week itself, Friday above 185.93, and that should be by a 1% margin. I'll be providing you that level on Friday. You can anticipate, well, the 198.23 all-time high from July of this year within probably another 2 to 3 weeks. Within 2 to 3 months, you can anticipate 215.03. And as I mentioned at the beginning of this video, this long-term objective at 231.11, attainable within 3 to 5 months, perhaps, of closing the week Friday above 185.93. Until then, once again, we can fall off by the end of December back into the mid 160s. So if your time frame is 3 to 5 weeks, you should have been playing the short side starting last Friday. You can play the short side now into the mid 180s, 185.93. If you've done nothing and you're sort of wanting to go short, your next opportunity in terms of a downside sell signal would be a close back below 180.10. Then I think you can play the short side. Those out of the money puts, those 165 out of the money puts will be more expensive than they were a couple of days ago. But the odds of you seeing, money, profit are more enhanced by a degree if we close below 180.10. And finally, just the opposite. If we close above 185.93 today, then I think there's a good reason for you to liquidate any short positions you have, at least through the rest of the week, to see how it plays out, because we could quite easily, within just a few days, reach 189.98. And once again, if we close the week Friday above 185.93, 198.23 likely within 2 to 3 weeks, and that 231.11 formation by the end of Q1 is certainly possible. I'm going to leave it at that for Tuesday's Apple. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow, Wednesday's Apple Report. You have a great day.